All right, y'all. What's going on? Another episode of Monday Night Take, man. It is live. We're in the house. I got my girl Yara Swain. She is back and alive, man. Let me just
Yes,
tell
so
you, yo, this season, man, you go from cold to hot, cold to hot, cold to hot. So, man, it's just been super, super, super duper crazy. But good to be back in the house tonight here for Monday Night Take. Excited to see all of you guys. And we got to tonight's show where we're going to be talking about, will earnings season pretty much soar, or will we see a plummet in the market this week? We're thinking that tech layoffs could decide the fate of that. So that's what we're going to be talking about here on Monday Night Take. So let's get it. Let's go.
That's 100.
All right, y'all, man. So we are back, man, back in here. Hopefully, you guys are ready for tonight. Like I said, we got TR back in the house, man. So I'm super excited for her to be back. Glad she's feeling better. But yo, man, I mean, it's earnings season here right now. You know, a lot of times people have questions pertaining to earnings season. What is that whole? What is the fate? I would say probably the number one thing that we've heard probably the past 6 months, really, when it comes to the markets has been, layoffs, whether it was Meta Platforms, Microsoft, whether, whatever company it was. I mean, we've seen companies like Pinterest lay people off. Like at
yes,
the end of the day, we've been seeing, these companies lay people off left and right. We're about to get Q1 earnings from majority of these tech companies here this
yes,
week and next week. So, TR, this is really your laying heavy, right?
yeah.
What can we really expect when it comes to these earnings reports this week? Like with tech layoffs, I know you've pretty much been on top of it. How is that going to affect, these companies, and, what things could we potentially hear or see this week, that's in the pipeline?
So it's really interesting. So I actually have like a mix of updates for this. So right now we have over 135,000 professionals that were impacted by
Mhm.
tech layoffs, and still more are happening. I was just told that 5 more companies will be added to this list as of Thursday and Friday. So right now it's looking very meek. However, there are still a lot of jobs that are still getting added. Still, like at these tech companies, it's just going to be at a slower rate. So we're starting. So we should honestly, I would say, expect to see an uptick overall. So I'm really excited to see like what this is going to look like for Q2 over Q1, because if you guys think about it, right, in terms of this hiring process, like some jobs they can take up to like 3 to 5 weeks, honestly, right, in terms of that transition. So we're really going to be able to really gauge these numbers, I would say, towards June. Okay.
Yeah.
Yeah.
Okay, so more so towards June, we'll be able to see, and that was one thing that I heard, like here in the first quarter, was just listening to different companies and things that they were saying. Like they were expecting to lay more people off this coming summer. I believe it was just, wasn't it Disney? Was it Disney today that, or yesterday? I think what they laid off like 4,000 employees. Told people, um,
Again. Yep.
yeah. So you're kind of seeing that more and more, and I think it goes back to what I said on previous shows. These companies really have just started to be able to examine and see that they're able to now kind of operate at a higher efficiency level. Like with less people, they're figuring out how to get the job done and more efficiently. I know people are going crazy, AI this, AI that. I do think AI is a part of it, right? But I don't think
Yeah.
it's the whole scope. Also think from just a common sense type standpoint, now it's like they're looking at the tools that they have, and they just want to trim the fat in certain areas that don't make sense. Because if you look at the targeted sectors that there's been layoff in, um, it's not really just been okay. A bunch of people are getting laid off just for no reason. A lot of times, people have been getting laid off because their sector of their company has
Right.
not been performing at the levels that once were in maybe i.e. 2020 or i.e. 2021. So there's some retraction in as far as the production
Yeah.
in those people's sectors. And
You
so
know what? Hold on really quickly, Lawrence. So what I would also want to say is, I'm sorry, guys. I'm still see that I'm trying. I'm trying. I'm sorry.
man, last week I was over here
Struggling right now.
yeah, you
No,
good.
I was just going to say that what we're also starting to see with companies, because I've been reading up on like the poll surveys with PwC as well as different LinkedIn reports. You also have these companies that are making the hiring like targets a lot higher too. So now what
Yeah.
they're starting to do is it's like another great way what companies are starting to do is I don't want to call it grooming, but they're basically making it harder. So now employees are leaving on their own. Like, so that's like another avenue too of what they're doing as well, along with trying to move out the aging workforce. There's so much, but it's like they're really operating off of like a scarcity mindset from a standpoint.
Yeah.
But then on another end, no, they're also being productive, right? So it's like what you said there too. So I think that I'm just curious to see like what the peaks will be happening in Q2, because a recession will still be happening, whether it will be moderate. And I'm curious to get your opinion on that too, Lawrence. For this,
Yeah,
like,
yeah, nah, I think what you're saying is kind of the exhaustion. So,
yeah,
two things there, right? So heading into even after this earnings report, we're gonna have in May, we're gonna have another Federal Reserve meeting, right? And so the Federal Reserve is more than likely gonna raise interest rates again. More than likely that'll probably be a 25 basis point move. Definitely not a 75, and more than likely not a 50.
yeah,
So interest rates are going to continue to go higher. I think that one thing that I would say is with rates going higher, that's still going to put more pressure on a lot of these different tech companies because the cost of capital is going to continue to increase. So as far as from an earnings perspective, right? Let's talk about that. Like, will earnings soar? Will they plummet this week? I think it's interesting, right? Because when layoffs first started to happen, we talked about the efficiency level, how companies can start operating at a higher efficiency. I think that earnings will actually be better this week, right? I think earnings. I'm taking the side that earnings will actually end up being better than what are expected this week. I think you'll see some decent prints from certain companies, and I think you'll probably see a couple earnings surprises as well too. I don't think there will be as many earnings misses as maybe what's forecasted. I think some companies will actually be able to, for the most part, be able to beat their earnings, and they may not beat them by. I don't expect them to beat them by a mile or anything like that. But I still do think that these companies will be able to have earnings that will be moving in the right trend in the right direction. And
yeah.
I think that you'll get a lot of kind of to your point, like tech layoffs. I think is one piece of it. I expect more, and we kind of highlighted that a couple minutes ago. Is I expect more, but I just expect these companies to continue to fire on all cylinders at the end of the day. I think that's where it's at with it. I think these companies will start to continue to fire on all cylinders. Earnings season right now. When you take a look at the tech layoffs, man, it's really decimated. Uh, the average person that's working at these tech companies that it has, seeing 10, 15, 20,000 people, you don't take those things lightly. But I think the translation into the earnings reports this week, I think a company like a Meta Platforms, I'm really super excited to hear from Meta Platforms this week. Not just, I think Meta Platforms, obviously they created themselves a new revenue stream, right? With these blue checks, man. And they'll be making a lot of money monthly from that. Um,
Yeah.
that number, that revenue will only continue to grow. And then when you take a look at what's the cost of them actually implementing something like that, I mean, it's like, it's really the cost of them allowing people to have blue checks is like nothing. So, I saw. So looking at that, I'm excited to see Meta also from the standpoint is they were a huge part of those tech layoffs, right, where they were laying people off.
Several
Um,
times. Yeah, they've
so-
had about three. Yes. Like honestly, like yeah, like mass layoffs right there. So I'm excited too to see where that can be. But it kind of reminds me of Netflix, right? Aren't they introducing like a subscription model now with advertisements? And that's the whole thing that's really crazy about Netflix. It was created so we wouldn't see it, and now we're seeing all of it again. But that just also goes to show you that they need that money too. So
yeah,
you're seeing how all of them are trying to operate and to adapt. So
yeah. Amazon started to charge people for all the returns, another
yeah,
revenue stream. Yep. So they're getting creative with it. These tech companies are getting really creative with it. So, and that's one thing that I've noticed in Q1. I've seen a lot of these tech companies really get more creative with how they're trying to really make money, especially in this environment. And it's like the little things once again, because they know that the budgets for the everyday person may not be the same, right? They see these companies are hip, man. They're seeing interest rates being increased, right?
Yeah.
And a lot of these tech companies, they quite frankly, they're not in favor of interest rates being as high as they are. So they're getting, they're figuring out ways to kind of get the job done. And you've seen a bunch of companies making adjustments, right? Like Tesla, how many price cuts have they done? And then they increase prices. So you're seeing companies like, I would say in Q1, if there are companies that are going to miss, it's because they might have tried something that just didn't work. Because
Yeah.
a lot of different tech companies were making adjustments on the fly. They were just trying to get stuff done. Like
Mhm.
you could really see that, not just from a stock perspective, but you could just even pay attention to daily updates and daily news. Like, this company's doing like this company's doing this company's doing that. Companies were literally trying stuff in Q1 just to figure things out. So some, I believe, will have figured it out, but I believe
Yeah.
that some others, the numbers will show, and it's gonna, I think now is the time where you're gonna see pressure come certain areas of the market where I think there's gonna be pressure in. Is a name like a Disney, right? Time to shine, right?
Wait. You're right about that. So listen, the entertainment industry did get hit in March, okay? And they're getting hit right now still with layoffs. So you were right.
We saw. I mean,
Yeah.
I'm not a big news person,
Yeah.
but I believe I'm not a big news person, so I don't really sit and watch the news all day. But I know there was a lot of news anchors, that were particularly let go today.
Yeah.
I know that wasn't completely just off the layoff front, but I think there's a shakeup in, like you said, in the media industry, even right now.
Yes.
ESPN, Stephen A. Smith, he's even been, he's even talked about it. Like, so you're seeing even some of the top people being cut out of their positions right now.
Yeah.
And, you know, I think that's something important to pay attention to. There's some shakeups that are happening, even like you said, in the media industry. So communication sector, one to pay attention to, right? Heading
Yeah.
into, we're in Q2 now, heading into Q3. So all
Yeah.
those different things. So yeah, these companies, I mean, they're still at this point in time, they're having to figure out, what are we gonna do? They're making structural changes on the fly. Some are gonna be like, some won't be like. So yeah.
Yeah, so what I could just say to just piggyback on that, and that's for everyone listening too. So Lawrence hit it right. Entertainment is definitely on a decline, but so is the hospitality industry right now. So is of
Mhm.
course technology. Technology, they've seen a decrease by 50%. It's huge. What's also on the list is also construction, Lawrence, too. So that could be something that we should also be paying attention to in terms of like this different traction. So
Yeah.
yeah, now on the positive end, though, there are still other sectors, right, that are still growing in terms of this market. So as of March, we've seen an uptick in farming and ranching. So that's actually up by 11%. The
Mhm.
utility sector is up by 5%. I know oil and gas is also up 4%. And then you have education and health. We know that there will always be in demand. Okay, we know that for sure. And business services as well is up 23%. So I think that in terms of like when you guys are making your decisions, as well as even locations, because that can also play like a big factor as well. I would just encourage you to pay attention, right, to like the also like the other peak markets. So when we're thinking about locations, because that also like impacts a lot too, right, in terms of like your livelihood. Right now, we're seeing that Miami, Houston, Minneapolis, and Nashville, we're seeing the most job opportunities as of last month in March.
Mhm.
So that could be something even like if you want to just, I would say,
Miami. You said Miami, Nashville, and what was the other one?
Houston and Minneapolis.
Houston, and yeah,
Yeah,
Nashville. Crazy. I heard Nashville is really growing at a rapid rate right now.
yeah, it's growing. It's
Yeah,
growing.
it's a growing city, a really, really growing city.
And
So
then and so and just like what Lawrence mentioned, right, with the fall of these tech companies right now, the biggest markets that are taking the biggest hits are New York City, Seattle, and San Francisco Bay Area. So we know that that's definitely a direct correlation of where this market is happening right now. So
got you.
yeah.
Yeah, but people still making LMVMH Very wealthy. Uncle Charles is funny. This is a good one. Yep.
Yes, correct.
Yep. It's a good one. Always a good one. Yep. So let me go ahead and share my screen real quick. Hold on. All right, you guys should be able to see my screen. I'm about to go ahead and get busy. So everybody can see my screen. You can see my screen, TR?
Yep, I can see it.
Perfect, perfect, perfect. So I wanted to dive in. So I wanted to pretty much go over pretty much tonight how I'm taking a look at these earnings estimates. So we have Yahoo Finance here pulled up. So we know Meta Platforms has earnings this week. So here on the analysis tab on Yahoo Finance, they do a great job of just being able to categorize, the earnings estimates and revenue estimates for the current quarter, but then the next quarter, also the current year, and then the next year as well. And then you also could take a look at the earnings history. So you could take a look at the previous past 4 quarters and, what were the actual results in those numbers. So when I take a look at the earnings history, 3 out of the last 4 times, Meta Platforms, formerly known as Facebook, has actually came in lower than expected from the EPS estimate, the consensus, right? So you'll probably hear this word consensus used a lot, and you'll probably hear it on the television, etc. So the consensus pretty much comes from the number of analysts, right, that weigh in, right, and the number of analysts that weigh in. For in this case, for this quarter, there was 39 analysts who weighed in, right? And then your average estimate was $2.03. Your lowest estimate was $1.14. Your highest estimate was $3.03. But your year ago EPS was $2.72. So a lot of times investors are looking to compare those Y over Y numbers, which is year over year. So your year ago EPS was 2.72. So that means your average estimate right now is $2.03. So that would be, if you were able to compare this from a year over year perspective, out of the 39 analysts that actually weighed in with a $2.03 estimate, you're looking at, pretty much for the most part, you'll probably go ahead and take that 2.72, and let me times that. Let's do the 272. And let's go ahead and times that by 20. So you're looking at probably about 23, 24% type decline estimate on earnings, the average. So right now with the average, that would mean, let's say we came in at the average, that would mean about a 23 to 24% decline year over year on the earnings tip from an earnings perspective, right? So you're talking about pretty much, a slash on the EPS, earnings per share. That's the estimate. So pay attention to that. That's getting ready to come out. Now, taking a look at this current quarter as well, the average estimate is $26.72 billion in revenue. The lowest estimate was 26.76. The highest was 29.28. Year ago, they did 27.91 billion. So that would mean a negative 1% year over year growth. Year over year decline, right? So that was 40 analysts that weighed in. So right now, this is why I'm saying, so right now, both estimates are kind of lower than what they did last year, right? The EPS is definitely lower. The revenue is kind of slightly. So there's two things that happens when it comes to earnings. Sometimes, and let me actually come down here because this is going to be your EPS trend. Your EPS trend, right, is where you're actually able to see, how has the EPS actually, either risen or declined, over the last 90, 60, 37, and what's the current estimate. So 90 days ago, the estimate was really $1.55. 60 days ago, it was $2, and it's pretty much been in the same range for the the past 2 months. Now the revisions is always something that I love to pay attention to because these numbers can always be revised. So just because the 39 analysts may have put an initial number, they can also come back and go ahead and revise. And what I actually just did when it came to the growth estimates, right? If you took a look at this actually did it. Obviously, it did it for you here right now. So, but those were the numbers that I was pretty much giving you guys a little bit before. Now, if I take a look at the EPS revisions, there's been how many revisions up in the last 7 days? There's been four. Now, how many revisions has there been up in the last 30 days? There's been 10. So if I've seen that there's collectively been 14 revisions up, but only one revision down in the last 30 days. So 14 compared to one. Now, we understand that analysts sometimes can be capping, they can be selling you a story and giving you all this stuff. But if there's been 14 revisions to the upside and only one to the downside over the past 30 days, that leads me to believe that there's something that these analysts may know. There's got to be something. And so that's what may lead me, right? When you take a look at the numbers, this is why I say, for example, if we come in, let's say the average estimate is $2.03, but if we come in at $2.40, that could provide a positive reaction for the stock. If the revenue and the earnings beat for Facebook is going to be flying after hours. If they beat on revenue and they beat on earnings, you will see this stock move higher. And if they give great guidance, that's what people want to hear. So when it comes to these earnings reports, right, a lot of times you're seeing, companies be able to, make revisions and revise higher, different things like that. They're making revisions. Um, and you're seeing these analysts, revise for higher expectations, higher earnings, right? Or, they're revising lower for lower earnings. This is where you would take a look and kind of monitor that and kind of get those details. This kind of gives you some soft data to be able to take a look at. And it's pretty much spelled out perfectly there for you. Now, another tab I like to take a look at is our statistics tab, right? So this can kind of give us an understanding of where the company is from a balance sheet perspective, right? You hear that word balance sheet. Now, a couple terms that I really like here, and you have a couple abbreviations over here, and you got your notes. MRQ, for those that don't know, MRQ is going to be your most recent quarter. TTM is going to be the trailing 12 months. So the total cash is 40.74 billion most recent quarter, right? So that's about $41 billion in cash. That's what they had in the most recent quarter. Now, total debt most recent quarter is $27.28 billion. So not bad at all. Not bad at all when you compare their total cash to their actual debt. Not bad at all. So that's your MRQ, your most recent quarter. Now, your income statement, your TTM, which is your trailing 12 months. So your trailing 12 months is, obviously the last 12 months, trailing 12, the trailing 12 months previously. Now, one thing that I really like is that net income, to see what is the company's net income. This is solid to have a company that has a net income of $23.2 billion. That's beautiful. Now, quarterly earnings growth year over year was negative 54.80%. Now, it is key to note, some people may ask, well, Meta actually missed their EPS last quarter. Why did the stock actually go up 15-20% after hours? Well, the reason why it went up 15-20% after hours is because they announced a share buyback program. They did announce that. And that is why I want to say, I got to look at the exact number again and slip the top of my head. Can't remember the exact number, but they announced a share buyback program. And so when they announced a share buyback program, that caused a knee-jerk reaction in the stock. The stock moved higher. Off of that, it ended up rising 15-20% after hours, from the market being excited about it. And Meta's been on a tear ever since. But it is key to note that Meta did miss their last EPS, right? So return on equity, TTM. Why is the return on equity super important? So return on equity is pretty much going to tell you how much money is being returned to shareholders. So you, as someone, if you're a shareholder of Meta Platforms, anytime, or shareholder of any company, when you're talking about a return on equity, TTM, right? The trailing 12 months, that is how much money is coming back into your pockets as you guys as shareholders, right? It's the company's job to be able to return equity to its shareholders, right? Bottom line, return on assets, 11.92 percent. Super important for a company, and this is what a management effectiveness, right? So this is what management gets, really great. This will not just, but they get graded off of stuff like this, right? Management effectiveness, like how are you managing, and being able to return equity to your shareholders. That's one of the number one jobs and duties of a CEO, right? So super important for me to highlight. So that's how you can do that there. Now, we'll take it to the charts, man. Take it to the charts tonight. So let's actually come here, and we're actually going to go here to the weekly time frame here on a Meta platform.
Mm-hmm.
So if you're taking a look at Meta, right, when top of this year, me and TR was doing the tours, different things like that. Meta platform started off this year at 123.37, right? So it started off this year at 123.37. So a couple of things to note this week, right? For the most part, Meta platforms over the past month of April has been pretty flat. So there is a level sitting right here at 228. So it's important for you to pay attention to that level at 228. Now, if price can make its way down, right, it's either two things that's going to happen. Meta's earnings are going to come out. They're going to really like it. And price is going to be able to at least attempt to get back over 228 and could run to 244 if it breaks over that, right? But in the event that it comes down, you're looking at 200 and then looking at 184. So this is a stock that, in my opinion, can move $20 either way. Either this is going to be a stock that's back at 190, 185, or this is a stock that's pushing 230, 240. Just as simple as that. And what I just went over is going to be the things that you need to be paying attention to and looking at as to why, that stock would do that, right? Whether it's going to miss EPS or make revenue, it's pretty much going to make or break the stock. So that's the analysis, like going into these earnings seasons, and paying attention to these different earnings reports is my job is to be able to get those numbers, see what the estimates are, and be able to kind of, sit back and really just kind of watch and be in a waiting game, to kind of see, what's going to happen. So I think that's super, super duper important for me to highlight. One platform that also can give you some of the stuff that I was just giving you on Yahoo Finance is also here, Earnings Whisper. So Earnings Whisper is always super good. So it tells you Wednesday after hours. So Wednesday at 4 p.m. Be paying attention to get the Q1 2023 Earnings Whisper numbers. You're going to be getting those actual numbers that are getting ready to come out. All right. So it kind of tells you exactly here what's the expected quarterly earnings growth, expected quarterly revenue, right? Previous annual earnings, previous annual, so it gives you some of those numbers I was calculating, obviously, by just pulling numbers. Earnings Whisper did it for you. So earningswhisper.com, great website to really use and have. You got your calendar right here. It's going to tell you literally, all the companies that given day they're getting ready to go ahead and report earnings. So, you have these various companies, listed here. This is obviously Monday, tomorrow, Tuesday, 6 a.m. UPS, Verizon, GM, McDonald's, General Electric. So busy. Spotify, PepsiCo, 3M, Raytheon Technologies, JetBlue Airlines, like Biogen. A lot of these companies you guys are familiar with that are going to be reporting pretty much in the morning, right? And then you have on the 26th. Now, one that I like, you guys know, I love paying attention to Boeing, ticker BA. So they did the work for you. 64% expected quarterly earnings growth, 25% expected quarterly revenue growth, 99% expected annual earnings, 18% expected annual revenue. So, with Boeing is expected to actually have a positive EPS. So let's go ahead and take a look at the past here for ticker BA when it comes to, let's see. Let's go ahead and take a look at ticker BA and see what it's been looking like the past couple of quarters. Now, mind you, Boeing has been one of those companies that's been on, the decline the past few years, obviously with the 737, Max, the different issues that happen. And you can kind of see what the numbers have been like. I mean, in the past 4 quarters, every single time Boeing has missed earnings largely by more than a mile, not even a couple miles, not even a few kilometers. They've missed earnings like if you were to drive from California to New York. That's how much they've missed. That's how much they've missed earnings. That's the type of gap that they've had. So when you take a look at, Boeing, large reason why is this company's taking a huge financial hit, and been behind the eight ball because of what happened, because of because of what's happened here, and I'm laughing because it's like I'm just looking at the number of negative 8,928%. I mean, man, Boeing missed bad that quarter. I remember that. So past 4 quarters, they missed every single EPS estimate. So 18 analysts weighed in. Average estimate right now of $1.04. Year ago EPS they did, negative $2.75. So I think that I'm gonna be honest with you. I think Boeing miss estimates again. And if Boeing miss estimates again, pay attention because at this level that it's at now, it's been sitting right on 200 and hasn't really kind of broken below 200. So this could
Mhm.
be a catalyst if it can get below 200 for it to come down to 190 and come down to 186. But if Boeing is able to somehow beat earnings and exceed, that will create a knee-jerk reaction in the stock, and you will be able to see this thing crack 215. If it can crack 215, it's going to be off to the races. So two ways. Obviously, the price action of this is super choppy. Super consolidation here. Not a lot of things going on, but just really, really, really watch it. Just pay attention, right?
Okay. So wait,
Now,
Lawrence, can you look up another company for them too?
yeah, go ahead.
Like maybe we could look at another industry, either like retail or consumer goods. Anything that comes up to mind.
Yeah, let's do Target.
Okay. Oh yeah, I need to go there tomorrow. So that's great. That's a good reminder.
Ladies will love that.
Yes.
Let's do Target, Target as they call it. All right, so cool. So Target won't they won't be coming out with earnings till May. So just keep that in mind.
Mhm.
But still, we'll do it right now. So when you take a look here at Target, last four quarters, they've missed 3 out of the 4 times. So they over the last 4 quarters, they missed 3 out of the 4 times. Now, they've missed by that the last quarter they actually beat by 35%. So that was solid. But let's take a look here. So the year ago EPS was $2.19. The average estimate is $1.77. So one thing that you're noticing here, as we've been looking at a few companies, you're noticing for the most part, most companies are expecting to do less on the EPS side from an estimate standpoint than what they did last year. Now, will it happen? We'll have to see. But this is the point that I was making earlier, where a lot of times these analysts, they can start to, and that's why it's good to pay attention to the EPS revisions. Not a whole lot, just one. But the EPS revisions a lot of times show the truth because sometimes these analysts they lowball the expectations, but then they'll start to revise within the last 15, 30 days. And when they start to revise, obviously that estimate can go up. So it's going to be fun to watch. $2.19 a year ago. And then sales are pretty much right here, are kind of expected for the most part to really be flat.
Mhm.
So a company like Target, from a consumer staples standpoint, right? Obviously we know a lot of people shop at Target. It's household name. You see Targets pretty much in any city you go to, right? For the most part. So, when you're taking a look at something like Target, is sitting here at 164, kind of one of those things that I would love to pull back here and take a look at statistics. Obviously, Target is one of those businesses that doesn't have as much cash, does have a lot of debt. Um, when you compare its total debt to its cash, total cash in its most recent quarter, but it does have a positive net income of 2.7 billion. Its quarterly revenue growth has been flat year over year, only 1.3%. Quarterly earnings growth year over year, though, has fallen negative 43%. So one thing that people will say is, its margins are starting to shrink. I remember when Target's profit and operating margin, I think, was about 6 to 7%. It wasn't more. It was about a year or 2 years ago. So Target will have some questions to really answer from their investors. About and management effectiveness will probably be one of the things that come out. But overall, how can we get this year over year earnings growth back together? So it's tough. Like I said, when you're seeing a hit on sales, core on the sales side, and the stock kind of pretty much expresses that. Target's been in the same spot since last June and August, pretty much just trading sideways. This stock has an all-time high of 266, and also, about 267. Excuse me. So you see that here. I mean, you're looking at the history of Target. This is why I always tell people to like zoom out and pay attention to the bigger macro trend. Like, you got to understand what kind of money is in this, right? Think about all the people who bought back here in the 70s, right? Target was a buck, a dollar, $2, $3, right? And still and held through the test of time, right? So imagine we teleport and we go back. We're not teleport, time travel,
Yeah.
and we go back to 1985 and we go take a look. Target was $2. I would love to go visit a Target store in 1985 right now and compare it to 1985 to compare it to 2023. So the reason I show this is it's always good to be able to, because think about, I'll be honest with you, probably the people that was bought this in 1985, they could have never imagined it would be at $163, let alone have made an all-time high of 276, right? So patience, patience, patience. You're talking about, if you bought this in 1985, you really had to wait
Years, decades.
you really had to wait 30 years to really be able to see some sort of real, like, life-changing type, monumental type returns on money. So if you were just 1985 buying stuff, 86 buying, 87, 88, 89, 90, it just kept buying, kept buying, kept buying, kept buying, kept buying, kept buying. And that's why when Uncle Charles, he talks about different things. Yo, I just keep buying. Uncle Charles, when he comes on, he just talks to us. He's like, yo, cut off the television, cut off the news, cut off the noise. I'm buying. So if you had that attitude of, hey, whatever happened in 86, I'm buying. We know what happened in 87, inflation and Black Monday, I'm buying. 88, I'm buying. 89, I'm buying. 90, I'm buying. 91, I'm buying. 93, I'm buying. .com bubble, I'm buying. I'm buying. .com bubble pop, I'm continuing to buy, continue to buy, continue to buy, continue to buy. We've got war in Afghanistan, George Bush is president, all this debt, economy crashes, financial crisis. I'm buying, I'm buying, I'm buying. Target fell over 50% during the financial crisis. I'm buying, I'm buying, I'm buying. So when you're seeing these different things, so when you're looking at this retracement of coming from 270 to 163, just ask yourself, do you think they're in these years right here, where do you think Target's going to be? These years, right? These years have yet to be written. 2035, 2036, 2038, 2040, 2041. I mean, we're stretching here. 2053. So, so that's one thing that I wanted to really highlight for us here. Now, last thing I wanted to do on the share my screen side was I wanted to talk about the VIX, right? Because I know I hadn't pulled it up in probably a few episodes. So the VIX is at its lowest level since this was actually the end of 2021, beginning of 2022. So the VIX has hit its lowest point in the past 16, 17 months. So when taking a look at that, two things, right? The VIX hitting its lowest level. Obviously, that's why we've kind of seen a lot of the selling kind of has disappeared from the market. But then also, it could be a setup, obviously, for us to maybe potentially see a little bit of a pullback. Maybe earnings will be that pullback. Maybe the earnings this week come out and they're dismal, right? I know we showed a lot of those EPSs not looking the best. Maybe the earnings come out this week and it's dismal. And with the VIX lining up here sitting at 16, 17, I want everyone to set an alert for the VIX on 20. You can do that by pressing the star here on your Yahoo Finance app, going ahead and adding this to your watch list and going ahead and adding an alert so you can be notified when this thing cracks 20. My thing is looking at the VIX, I think there's opportunity for the market to pull back and the VIX to get back above 20. The VIX obviously being at its lowest level in the past 16, 17 months is really a perfect setup for the VIX to go lower. I'm assuming for the VIX to come back and go higher and the markets to pull back and potentially go lower, right? So, really be watching that. Now, if we can see the VIX get to 15, 14, 13, that's where you're going to start to see the SPY probably break 420 and see the QQQ get above 327, 330. So really watch and pay attention, to the VIX, set your alerts, and just wanted to highlight that for you guys. I know you guys have probably seen the market the past couple of sessions been just really a little bit choppy. I know today the market kind of it pulled back just a smidget, nothing super crazy, but obviously earnings is here, so it's really make or break season. So that was my takeover for today. Hopefully that helped some people out. That was
No,
good.
that was great, Lawrence. That was great. Thanks for sharing.
Yep. Yep.
All right, awesome. So, y'all, I just want to just share a few updates in terms of this job labor market, and then I'll bring you back over to Lawrence. So, overall, there have been close to 170,000 layoffs since January 1st in the United States. So, overall, like what we're seeing is that it's been a 0.6 decrease in all industries from from February to March. Now, on the positive note, there were over 236,000 jobs that were added in March, but there's been a surplus in April. This is what I'm getting excited about, right? This is why I'm really curious to see like where we're going to be at in Q2, because there's a lot of momentum in April, and there's going to be even more in May. So as of right now, there have been 428,000 new jobs that were added in April. Okay, so you see how big of a difference that is from March to now. So I'm excited about that.
Yeah.
So, yeah. And then also, as mentioned before, like the top industries that are growing as of right now are farming, ranching, and forestry, utilities, and gas. Okay. So these are the top three. So if you're interested in investing, it would behoove you, right, to move forward with this as of right now. And as a recap, the top locations are Miami, Fort Lauderdale. They've actually seen honestly an increase higher versus before we even had COVID that commenced. So I know, like right now, Miami is definitely a huge market. Now, in terms of unemployment, so as what I said before, that we have over 170,000 people that were impacted like by layoffs that are unemployed. But now we have a total of 1.6 million. Okay, now these numbers are only reflecting as of last week. Okay, because I'm still waiting to hear like what the updated numbers are, and I'll have that by next week. So I can just tell you if anything has changed on that end. Okay. Also, let's see. Okay. Also, now in terms of like all the layoffs that's happening in this market, this is also taking a big hit on retail sales as well as manufacturing activity. And also too, what a lot of people are also starting to see that in terms of banks, they become a lot tighter in terms of their lending. So this is also impacting households in terms of like them getting more credit as well as their businesses too.
Yeah.
Yeah. So we're basically seeing like everything is getting connected here.
Yeah. And I think I've heard business credit too much. I
Really?
have an amnesia how many business credit coaches and all that stuff. I don't know, man. I'm having amnesia just hearing that stuff, man. But yeah, man, I think that's right. And I think one thing that I'm noticing is to the point that you just mentioned about people, the banks being tighter. One
Yeah.
thing I've noticed is that, obviously the banks being tighter, I've noticed that some people are now saying they're business credit gurus and they're trying to get people funding.
Yeah, don't fall for that.
So I'm hearing that more and more as the banks get tighter. I'm hearing that more and more. So
Yeah,
nah,
and they'll probably will have high interest rates, and they're probably a shark. So please don't fall for that. Do not, because they're in my inbox too, honestly. So
yeah, sharks, exactly. That's a
that's what
great
they
word,
are.
sharks. Yep, sharks in the water, exactly. Yep. So
Yeah,
now, I think that's for the most part pretty much it for us.
yeah,
To kind of answer the question before we close out. Will earnings soar or plummet this week? Tech layoffs could decide. I think obviously tech layoffs is going to decide. Now, like I said, I would lean. I guess I would say my pick going in,
hmm
right? My pick before. I think that earnings will actually still. I think earnings will beat those numbers. Now, as far as will the stocks react in a positive way, we'll
yeah,
see. But I think that I think you'll see some EPS in line, and I think you'll see a few beats. I don't think nothing will be major, but I think that because those EPSs have kind of been lower kind of than expected, I think that you'll see some beats, a few of them. So yeah, that's kind of my take.
yeah. I can feel you on that. And if you guys think about layoffs too, that doesn't necessarily mean that there's going to be an increase in stock prices. To me, like whenever we think of a layoff, we know that that company's in trouble. So whether it could be they're losing market share, they're losing market, like they could be having a dip in revenue. So we know that they're like these companies are facing a deficiency right now, which I think it's time for y'all to capitalize. Honestly, so I think honestly on a positive end, bro, that's what I see where this is heading to. So
Yep.
I'm
So
excited. I'm excited. I'm just excited for Q2 to see what this is going to happen.
Yep. So me as well. So I think listening to those earnings calls this week, that's gonna be super, super duper important. Next week we'll be back to really discuss and highlight and talk about it. That'll be the first show of May. Um,
Yeah,
so yeah, man. I mean, like I said, we're here to pretty much provide and really give our take, right? No pun intended, on what's happening in the labor and in the stock market. So um,
yeah,
earnings this week. We'll see what happens. I think there will be a few trading opportunities. I'm
yeah.
looking. I'm looking to really capitalize off of some of the reversal opportunities like next day, right? I think like stocks after the day after earnings. I think there will be some run ups from even like Microsoft, right? We didn't touch on them today, but
hmm
Microsoft has earnings tomorrow. At 4 p.m. EST. So right after the bell closes, Microsoft is going to go ahead and report. So AMD and Apple do not report until next week, right? So just kind of keep that in mind that Apple won't be reporting this week as usual, but Amazon will,
Okay.
platforms will. So Apple and AMD go next week, and you'll see obviously a few others as well. So yeah, man,
Wait,
continue.
hold on really quickly. Hold on really quickly. I forgot to also mention this too, but I forgot to mention earlier is just the importance of these government jobs. So I have like a lot of clients that do work for the federal government, and I was told that they did not spend all of this funding, so new jobs are about to open up. So as of March, they even added 47,000. So if you are interested in going to federal side, now is the time for you to update your resume and look at these opportunities. So if you're not on the federal side, you need to use filters that's called like open to public and things like that as well, and pay attention to these little clocks. If it's a red and yellow clock, that means
Mhm.
that they're closing that job very soon, which means that you will be prioritized. So I just wanted to just throw that out there. And then also the reason why I'm just really just curious to see what's going to happen is that since March, we've had over like close to 500,000 people that were added back to the labor force. So that's why I'm curious to see like
Yeah.
what's really about to happen with this at the end. So yeah.
Nah, super duper important. So,
Um,
and important week will be next week. So
yep.
those labor reports will come out for April. Will come out next week. So we'll
Exactly.
have.
So we can really give you a real update on this.
Yep. So nah, man. I just want to say we appreciate y'all. Me and Tiara Swain,
Thank you,
Tiara
guys.
Swain, Swain
Thank you.
Solutions. She's back in the building, man. Back here full force. I'm rocking my guy Dantes, his new gear. One Love. Shout out to One Love Clothing. Got me looking right today. So, yo, man, just continue to let's go ahead and continue to push forward. Let's get it, man. So,
All
I'm
right.
super
Awesome.
excited.
Awesome.
So we'll see you guys on next week's show. This
See
has
you
been
later.
another Monday, man. So we'll see y'all next week. We're
See you
out.
later. Have a great week on purpose. Bye.